Welcome to video number 3, the introduction to the income statement. Let's take a look at our roadmap. We're in the third video now. We've gone through the basics of financial accounting. We've introduced you to the balance sheet. Now I want to introduce you to the income statement and talk in specifics about what you might find on a company's income statement. Let's go back to this slide where we had all the categories of accounts that we're keeping track of in accounting. And this time we're down at the bottom here. We're talking about income statement accounts. Remember the definitions: income accounts are revenues earned and they increase equity. Expenses are costs incurred by the company, they decrease equity. And all of these amounts are kept track of over a specified period of time. In this class, we're going to be focused on years. And so how much income did the company have during the year minus how much expenses did the company have during the year. Now over this slide, I'm going to overlay specific accounts that I want to go through in this video. In terms of income accounts, I just want to go through one account, revenue. And in expense accounts, I want to just go through 3 different expense accounts. So let's go. Again, we're going to use Rivian as our example company. So here is the income statement of Rivian. They call it their statement of operations, but I'll refer to it as an income statement. And on this income statement, they have their income accounts and their expense accounts. And when you take income minus expenses, you get down to net income, or in Rivian's case, it's a net loss. So the first type of account I want to go through with you is income accounts. And the definition of an income account is it represents revenues earned during a period of time. So let's zoom in on the revenue section of Rivian's income statement. Here it is. It's typically the top line of company's income statement. And there it is, the revenues. What is revenue? Well, let me show you. Revenue is when Rivian has finished producing its electric vehicle and it delivers the vehicle to the customer. The person in the red shirt is a customer, and now the car has been delivered to the customer and Rivian has earned the revenue. Whether or not they've received the cash, once Rivian delivers the car to the customer, they've earned the revenue. So revenue is the amount earned from delivering goods or services to customers during the year. So when we look at the different years on this income statement, we can see in 2021, Rivian barely earned any revenue during 2021. They weren't really selling vehicles during that year. But in 2022, sales started to ramp up and they sold 1.6 billion of vehicles during 2022. In 2023, they sold 4.4 billion, so their sales are really ramping up nicely. And that's what revenue represents. It's what is the customer willing to pay for goods you delivered to them. Okay, now back to the main income statement, because that's the only income account. Now we're going to go through the expense accounts. I want to talk about 3 expense accounts. Remember, expenses are costs incurred by the company during the period. So the first expense account I want to go through with you is called cost of goods sold, and it's right underneath the revenue line item. You see that? So I'm going to put the same picture up here. You see this car was delivered to this woman here. Well, cost of goods sold captures of the very same products that we delivered to the customer. What did those products cost the company? Okay? What was the inventory cost of those companies, of those products? Okay? So in this case, in 2023, the cost of goods sold was 6.4 billion. Now, if you can still see the revenue, we're going to compare that to revenue of 4.4 billion. If you remember on one of my first presentations, videos, I said that Rivian, in just selling electric cars to customers, are operating at a loss. This is what I meant by that. They take in revenue of 4.4 billion, but the cars that they sold cost them 6.4 billion to manufacture. So they are losing money on every car that they manufacture now. What does the company need to do to turn that around? They likely need to increase their sales volume because they've got a lot of fixed costs in their manufacturing process. If they can increase the volume, they'll be able to start turning a profit on these car sales, but they need to be selling more and more cars. Okay, so I hope I've explained that the cost of goods sold is the cost of the goods or services delivered to the customer. So revenues compared to cost of goods sold is like comparing what did you charge your customers compared to what did it cost you to manufacture the inventory. Okay, the next line item I want to go through with you is called wages expense, and I've renamed a line item on their income statement, which is primarily wages expense, okay? So we're going to just imagine for our purposes that this entire line item represents wages expense. What are wages? Well, Rivian has employees, and those employees have fun things to do in their lives, but instead of that, they go into Rivian office and they work. And in return for their labor, the company is required to pay them a fair wage. And that's what this wage expense represents. Now, it's not the amount paid to the employees, it's the amount the employees earned over the period. So whether or not the company has paid the employee, they will recognize wage expense on their income statement to reflect the cost incurred for employing employees during the period of time presented on the income statement. And just as an example, the CEO of Rivian, his name is Robert J. Scaringe, okay? He's the CEO. And we can see that during 2023, his total compensation, so salary is cash, but if you include stock and everything else, was around $14.3 million. And that is part of this 2023 wage expense. His wage is part of that wage expense, okay? Because he earned that wage for working at the company during that year. And here's the definition: wages earned by employees during the year. That's wage expense. And the third expense I want you to be aware of, and again, I've renamed one of these line items, is depreciation expense. So let's imagine this entire line item relates to depreciation expense. What is depreciation expense? Well, the company has got this manufacturing plant, and they've also got office space. These, if you remember, I referred to them as property, plant, and equipment, or PP&E. Well, these things don't last forever, do they? These things depreciate over time. They lose value over time. And accountants keep track of that loss in value as depreciation expense. It's an estimated amount, and it's usually systematic. We just assume assets lose value on a linear path over their lives. So depreciation expense is the systematic loss in value of your property, plant, and equipment due to the passage of time. And here's the definition we'll use going forward: systematic incurred loss of value of PP&E during the year presented. Well, that's it. We've gone through the main accounts I want you to be aware of on the income statement, and we've talked about the income statement of Rivian. We talked about how if you want to compute net income, you take income minus expenses and you get net income. If expenses are greater than your income, then you might call it net loss, as Rivian does. We have also talked about the connection between the income statement and the balance sheet. So this net income or net loss will either increase or decrease our accounting net worth, which we refer to as equity. And I'm actually going to show you that now. So if I zoom in on this net loss item at the bottom of the income statement, let's zoom in on that. In 2023, you can see they had a net loss. Those parentheses means negative, means minus. So they had a net loss of $5.4 billion in 2023. That was Rivian's operating performance that year. Now, if I go to their balance sheet and I go to their retained earnings account, and now I'm going to bring that onto the other slide. There's the retained earnings account. So now I've got the bottom line of the income statement, which is their net loss, and one of the equity accounts called retained earnings. I've also put the definition of retained earnings. It's accumulated net income minus accumulated dividends over the life of the company. And rather than the life of the company, I just want to know what happened this year, okay? What happened between December 31st, 2022 and December 31st, 2023? Well, we had a beginning of the year retained earnings balance, which was $13,126 negative. We incurred a net loss during the year of $5.4 billion. Rivian is an early stage company, so they're not currently paying any dividends. And so if you take the beginning balance minus that net loss, minus zero for dividends, you get the ending balance of their retained earnings account, which is $18.5 billion. So this is what I wanted to show you, is the connection between the income statement and the balance sheet. This top one here is the income statement, which I'll call I/S. And this bottom one here is from the balance sheet, which I'll call B/S. And there is a connection between the income statement and the balance sheet. When you have a net income, that contributes or increases your net worth. When you have a net loss, like Rivian did, that takes away from your net worth. So as you can see, this negative equity account is becoming more negative as time goes by, as the company experiences losses. So we talked about all of the income statement and balance sheet accounts in these past two videos, and we've kind of defined them for you. And keep in mind, the relationship on the balance sheet, which is that assets equals liabilities plus equity. On the income statement, net income is income minus expenses. And don't forget that the income statement reports net income or net loss, and that will either increase or decrease your net worth through the equity account called retained earnings. Now, something you could do on your own, if you wanted to, is you could take a look at other companies' financial statements that you might be interested in. This is a really good way to practice your financial accounting knowledge, is to take a look at another company's financial statements. How could you do that? Well, let me show you how I found the Rivian financial statements. I went to a website put together by the Securities Exchange Commission, and it's sec.gov. So you go to sec.gov, and what you want to know is company filings. So you go to this filings section, and you want to search for a company's filings, so that yellow box there. And when you click on that, you get this search bar. And so what I plugged into there was Rivian Automotive. You could plug any public company you wanted to in that box and click search. And when you click search, you get the page for Rivian's filings with the Securities Exchange Commission. And if you're interested in financial statements, what you're going to be interested in is this section that says 10K and 10Q. We'll talk more about that in the future. But you're interested in Rivian's most recent one you could find, 10K. That's what you'll be interested to find if you want to look at their financial statements. And when you click on that document, it opens the 10K of Rivian, which has an index. Okay, it's got a table of contents. And the one you're going to be interested in as a part of the 10K is going to be item 8, which is the company's financial statements and supplementary data. So when you click on item 8 or go to the page it tells you to, that's when you arrive at the financial statements of Rivian. You'll get to see the balance sheet, the income statement, and much, much more, which we'll learn about in MBA Financial Accounting. But for now, let's just look forward to our next video. Now, in our next video, we're going to begin the accounting crash course. We're going to start talking about the actual mechanics of accounting. So the next video is just an introduction to the accounting process that takes economic activities and transactions and converts them into the balance sheet and income statement that we've just learned about.